Firstly, James, thank you so very much for your time in doing this. Really appreciate you talking to me and sharing your knowledge and information on the investment side of cryptocurrencies and blockchain. Now, before we get started, just wanted to check in. How's your day been so far? And is there
Yeah.
anything interesting going on in the cryptocurrency and blockchain world?
Okay. Well, today's been good. So I suppose it's unusual and it marks probably one of the lowest volatility price points for Bitcoin on record. That's 17% on a 30-day average, rolling average. So it's met a kind of similar level we saw at the start of this year. But it also highlights I just think the markets are super quiet at the moment. There's not a huge amount to talk about.
Absolutely.
There's the summer doldrums, people are away. There's not much going on at the moment. Not many people putting big positions on. Yeah, it's quiet at the moment.
Do you think it's because of the news that is going on right now regarding Grayscale Bitcoin ETF? And most likely that news might be delayed to, let's say, Friday. Is that one of the reasons why you feel?
Our markets, yeah, I think what you might be alluding to is our market's kind of treading water, waiting for a Grayscale decision. I think there's lots of kind of quite big decisions. We had the ARK ETF decision recently. It's not rejected, it's delayed. This is a tactic that's been keeps them being kicked down the road, so to speak, by the SEC. And I think with Grayscale, I mean, my view is quite pessimistic in that, well, it's positive in that they will create a Bitcoin ETF, that allow a Bitcoin ETF at some point. It just probably won't be now. And, I think a lot of it is similar to the gold market back in, say 20, 25 years ago, when people started creating. I was working for the company Securities, who created the world's first gold ETF, or technically it's an ETC here in Europe. And there were, again, concerns about these unregulated exchanges trading gold and who's going to supervise them. Similar sort of story to now. And so I think it will get pushed back, I think, by the SEC. There's 4 questions they need answering. And one of them is around this kind of regulation supervision. Exchange supervision. And I think they're probably not answered just yet. So whilst we'd all love to see that. Also, I think Grayscale's becoming less important. We've got BlackRock here now, and BlackRock's the largest asset manager in the world. It's got access to so many more potential investors than, say, Grayscale has. A massive distribution team. I think, to me, that's the important thing show in town at the moment, and we'll get the decision from the SEC in September sometime. Again, I'm not that positive for the initial response, but hope it will be.
Hopefully another delay tactic by SEC. Now, before we get into the ETF side of it, can you tell the listeners, particularly you are from Dubai, about your experience? Because if you go through your LinkedIn profile, you have a phenomenal experience in fund management, investment strategy, and I would also say kind of like an expert in the ETF landscape as well. I'm sure our listeners would love to know about your background and how you got involved into Bitcoin and cryptocurrencies and your role as the head of research in CoinShares.
Sure, yeah. So I did a mining degree, mining engineering degree, and then a computing and geophysics master's degree. Wanted to go to the oil industry. Oil price super low. Ended up in finance. Partly because of a girlfriend at the time. But I decided that finance was a good place to potentially make money, and it's an area where, if you're quite entrepreneurial, you can be quite financially successful. And I started off working for Barings Bank, which was bought by ING for £1. But I was working for that team, and I was an equity analyst originally, so valuing companies, and then moved on to be an investment strategist, which is a bit like I suppose, an economist, but with a commercial bent. And for many years I was doing that, looking at different countries in emerging markets and figuring out whether, we should invest in those countries. And then I moved on to what they call the buy side, for moving from a stockbroker to a fund management. And that was at HSBC, a couple of years there. And then I moved to Coutts, where I was a fund manager for 7 years, running an £8 billion multi-asset portfolio. And I think it's there that really helped me understand the kind of the mindset of investors and how to invest properly, and in a kind of measured, modest way, rather than really gung ho, which is sadly the kind of the image that the Bitcoin world has, is investors being very gung ho. But I think there are a growing number of investors that are very pragmatic and sensible about Bitcoin investments. And then after that, I moved to ETF Securities, where I was head of research. And it was there I started getting a lot of questions about Bitcoin, because we had Europe's largest gold fund. It's people kind of thought, well, yeah, you're the right people to structure a Bitcoin ETF or ETC. And so I actually didn't know that much about it back in 2015. So I thought, okay, well, let's build my own mining rigs. So I built my own Ethereum mining rigs and mined both Bitcoin and Ethereum for some time. I thought proof of stake was just around the corner in 2018, so I sold my Ethereum mining rigs. A bit wrong on that one. But I then ETF Securities was sold, and then I ended up working for CoinShares, and I had research there. And that's where I've become, I suppose, a much more of an expert on Bitcoin and other cryptocurrencies.
Absolutely, and a lot of the mainstream media, particularly who deal with cryptocurrencies and blockchain, they often post your links and the blogs that you do actually provide. Now, before we get into that, can you tell our listeners what is it that CoinShares does? And can you give us an overview of CoinShares' mission in the cryptocurrency space?
Yeah, we are Europe's largest crypto fund and the second largest in the world. We have roughly, depending on what the price is, maybe it's about $3.8 billion of assets under management. Primarily that's in Bitcoin and Ethereum. We also have a blockchain equities fund, which is about $700 million in size. We also have a new hedge fund, which is an actively managed fund that exploits arbitrage between different exchanges and has various other investment strategies that they employ. The firm's kind of split into two. We have the asset management side, which I just discussed, and then we have a trading team, which is a prop desk that trades different cryptocurrencies. And we're based in Paris, London, New York, and the head office is in Jersey. I suppose the company's mission is to provide kind of financial and technical solutions for investors. I think the company see themselves as democratizing Bitcoin. It's quite technically difficult to buy Bitcoin, and so exchange trade products really make it easy for traditional investors to buy into the asset class.
That is absolutely beautifully said. Now, from a research point of view, James, can you tell us how is it that CoinShares differentiates itself from other companies? Because what I tend to do is every Mondays, I look at your blog. That is the first thing that I look at. And then I also look at Glassnodes. And then I look at Missouri and quite a lot of other reports. So and what I particularly like about your report is quite simple and easy to understand.
Yeah. So I think if you look at where Bitcoin came from, it's a very, very technical background. And most people, they look at, I'm actually quite a tech geek, but most people, I speak to my mum about technology, her eyes roll, she doesn't understand it. And I think part of the problem with a lot of research out there is it's just way too techy, way too difficult for most people to understand. And also, I think because it has such a tech background, there's a lot of kind of what I'd say is kind of technical analysis. So hodl bands or Bollinger bands and heads and shoulders, there's different kind of trading, which I don't believe that much in personally. But there's a lot of that commentary going on. I just never found that interesting. And my mission at CoinShares was to just try and help people understand crypto assets better. So it's kind of an educational component to it. Expressing it in more of a layman's term or more of a financial professional's term, crypto world, and trying to avoid a lot of the kind of classic acronyms and confusing tech speak that a lot of people sort of employ in the crypto world. I think the other mission is what I noticed is there's a lot of data around technical data, blockchain data, but it's incredibly difficult to decipher. A Glassnode has, which we subscribe to, has very good quality, by the way, has a massive amount of data, but it is quite difficult to access because it's quite often via an API, which a lot of people can't do. And people in the traditional finance world are used to using Bloomberg and Excel. But a lot of that technical data is a lot to it, and it's difficult to understand. So we've been just sort of cherry picking bits of data that we know we can interpret and talk about frequently. And then there's things like funds flow, which is quite a difficult thing to calculate, but it's something we spend a lot of time on, looking at how investors are taking their money out of crypto or putting their money into it. We have various surveys. We're trying to create kind of a unique set of data, unique data set that is it helps people understand the crypto world better. So fund flows, what it's telling you is how investors, what's the sentiment essentially. And we have various different surveys and, just help people laymen understand the crypto world. And fund flows has become massively popular. Yeah. It's easy for me to write. It takes about 2 or 3 hours every Monday. Very simple.
And to be honest, it becomes really easy for me as well because I look at your blog and it's so easier to understand and it's to the point. And the one thing which you mentioned about Glassnodes, it has so much of technical analysis. And what I always tell my clients is, when you do all these technical analysis, and if you do price predictions, all price predictions are 100% right 50% of the time. So, having the market sentiment is absolutely beautiful. Now, you do publish a blog every Mondays via Medium. So can you tell our listeners, where do you get the information from? And you've already mentioned, what is it that the blog contains? Are you looking at, let's say, the Explorer, or are you looking at, let's say, Glassnodes and other medium for your source of information?
So none of those, actually. None of it's on-chain data. It's all on Bloomberg. Okay. And fund flows in aggregate is quite difficult to calculate, but on a very simple term, I'm just looking at the ETFs and how the number of shares change. So it's not the change in assets under management, it's the change in the number of shares. And that tells you whether people are buying or adding to Bitcoin or selling it. And then I aggregate that. There's about 250 different exchange traded products around the world. And I've seen a few other people attempt it, but they don't tend to have quite sort of comprehensive coverage. And I source the data from Bloomberg. It's all free, the data for me to send. If anyone asks me, I'm more than happy to send them the data.
Absolutely.
There's nothing proprietary about it, really. It's funny. It's surprising it's become so popular, but I suppose that's a good thing.
And what I've been doing, James, is, the blog that you provide, I copy-pasted, put it on ChatGPT. And I asked ChatGPT just for fun, based on this, can you make some predictions? And, it actually gives out some kind of predictions. And, it gives you a very concrete and very short and sweet, simple information. So thank you once again, for providing a really concise, short and sweet information. Now, what I wanted,
That's very interesting. I mean, we have backtested a lot of this, and I've got data going back to 2015, funny enough. But actually, I used to write fund flows reports on other asset classes in equities and commodities, for instance, and it does vary a little bit from one asset class to another, but ultimately, is it a leading indicator? Back testing tends to be inconclusive. I do think it tells you it's quite good at telling you when sentiment is on the turn. So we had quite a negative run this year, and I think, a lot of that was taking profit. The price trod water for a while. Right now we've seen a big selling streak in short Bitcoin products. So there are people buying the right to sell Bitcoin. So they profit when the price falls. A lot of people are selling out those positions. So I think what it's telling me is that people are taking profits a little bit, but they're not necessarily incredibly bearish. But again, it helps with these big turning points, and it highlights changing sentiment.
Absolutely. James, can you also share some recent trends and the changing narratives that has caught your attention? Something, which you haven't experienced, let's say, in the previous years.
Oh, this year, Well, we've definitely seen a lot of inflows, and well, not as much as 2021, for instance, and I think 2022, even though it was quite a negative year for Bitcoin, we saw $800 million of inflows. The prior year, it was $9 billion, by the way, in 2021.
Okay.
But even in an incredibly bearish year, people were still buying. They were kind of bottom fishing, I think, then. This year, it's been quite choppy. It's been when the SEC came out with its first kind of shots across the bow for the crypto world for various exchanges back in March or February time, we saw instant outflows and a long run of outflows. I think it was like a 10 straight week run of outflows. It worried investors. But it's interesting, with the last time the SEC really hit down hard, I'm trying to think who it was against Binance. It was pretty quite negative, actually, but the markets just shrugged it off. Bitcoin was at 20,000, went straight up to 28,000. And you're seeing that in the fund flows too. Investors are still buying at these levels now. What's really encouraging is that despite the ups and downs in the price, there really aren't that many people selling out positions. On a net basis, it's just continual aggregation. Even this year, we've got roughly $380 million of inflows at the moment, net on a net basis. So, that's quite encouraging in my view.
That's absolutely great. And one trend, James, which I've been observing, particularly in 2023, is that of stable coins. And I'm not sure if you look at that particular trend. And one thing which I've noticed in 2023 is that the volume is low, and it is accounting for a high percentage of the total cryptocurrency market volume. So stable coins, let's say, is accounted for 94%, 96%, in certain cases, even 97% of the total cryptocurrency market volume. And last month, there has been Binance, which is starting another stable coin. There is Hedera Hashgraph, there is Ripple. There are quite a lot of projects getting into stable coins. How do you think stablecoin is painting the picture of cryptocurrencies, and what kind of an impact do you think?
We've done quite a lot of work on this. Actually, measuring volumes in the crypto world is very difficult. So there are exchanges still today that do wash trading to make themselves look bigger than they actually are, and various other reasons. So we actually created a list of trusted exchanges. So our estimates are probably on the more conservative and low end, because there are exchanges out there that we don't cover, particularly the Chinese exchanges, because of the wash trading issues. I mean, some exchanges are quoting sort of $5 billion a day, and yet, you look at the website counts, they're getting maybe 100,000 hits per month. It's not right. When you look at something like Binance, it's getting 2-3 million hits a month and is trading, sort of $1 billion a day. So, something's not right there. So we've created a list of exchanges that we trust, and we've seen a big dip in volumes this year. I mean, at the start of the year, we're doing on trusted exchanges $11 billion a day in Bitcoin against all currency pairs, whether it's fiat, stable coins, or crypto. And now we're trading about $2.5 billion a day at the moment. So that's for several reasons, though. One is we're in the summer doldrums where everyone's on holiday and not really trading. And a big one is the stable coins. Now, if you look at the start of when stablecoins really picked up in their market share, it was when there was a strength in the dollar, and people were preferring to hold the dollar rather than Bitcoin. And actually, the dollar and the Bitcoin have a inverse relationship of minus 73%, so hugely inverse. So you're basically, if you're bullish the dollar, you've got to be short Bitcoin essentially, and vice versa. And as the Fed was hiking, that led to the market share of stable coins, because they're predominantly dollars, really rising to a point where I don't quite see the same numbers as you. I saw they peaked at about 90%, 88% of total crypto, Bitcoin at least. And that recently plummeted. Now, that's for several reasons. The fee holiday from Binance ended in March, and that was suddenly saw a crash down. So that had definitely had an impact. And then the double whammy was the regulatory crackdown too. That meant a lot of US holders couldn't really trade stable coins anymore, or have are reluctant to. So the exchange, the stablecoin volumes, represent around 80% of market volumes right now. And if you look, who was dominating? Binance was just killing it.
The USDT also.
Yeah, it had an 85% market share of the stablecoin market at one point, and that's fallen to 40% today.
Yeah.
And that's a direct result of the end of the fee holiday and also the regulation.
Absolutely.
So when you look into the color of it, that's the reason why. I mean, and also then now with the Fed's about to pivot, it probably won't hike in September. The dollar has peaked already and has depreciated quite a lot if you look from the start of the year. So I think there's less appetite to hold something like the dollar now as well.
And am I right in saying that Michael Burry, the guy from the movie Big Short, he's also gone ahead and short $1.6 billion or something, isn't it? I didn't read through that news, but am I right in saying that it has more?
Yeah, that's right. 1.7, I think.
1.
I mean, all I'd say, and the crypto world is guilty of this just as much as any other fund management world, is avoid celebrity investor. The credit crisis is a classic example of this. There were people that became, like Paulson, for instance, became incredibly famous for timing the credit crisis right, and John Dory is another example. Paulson's never really managed to achieve the same kind of performance since then. I think it is, people should try and look at the markets and the fundamentals of the markets on their own, really. And try not to follow some of these celebrity investors because quite often they don't get it right. Now, I know plenty of economists in 2006, before the credit crisis occurred, that were talking a lot about the credit crisis that was about to happen, but got it wrong by a year and lost their jobs as a consequence of it. So I do see John Dory in some respects just kind of got lucky in many respects in his timing. There are a lot of people that had the same view as him, but the timing was incredibly difficult to get right. And I now, my first thing I think about now, and I heard he put this trade on, was, okay, has he got the timing right? One way to precipitate this is to make as much noise as he possibly can and utilize his reputation to try and push the market into a downward spiral. And it's very much within his, he has a very vested interest in that happening. So that's why I always think, when someone famous comes out saying they put this short on, they're hoping the market says, oh no, I should sell now, and so I'm always skeptical like that. But, I actually think on the fundamental premise, John is right, that the markets are overvalued in the equities at the moment. And the US is about to go into recession. It's just we've had this period which a lot of people have kind of miscalculated, including myself, that people had a large amount of cash sitting on the sidelines after COVID that they hadn't spent. And that's kind of propped up the US economy and it's kind of softened the blow a little bit, I think, from the incredibly aggressive rate hikes. But, the transmission of aggressive rate hikes into the economy do take some time. And I think we'll start to see that towards the end of this year and early next year as well. I mean, if you look at credit conditions, they look really bad right now. And it's starting to have an effect. The retail sales were good this month, but, I think people are getting a little bit complacent. So I think John's right. It's just getting the timing right is incredibly difficult.
No,
I don't have the balls to put on that kind
of. When you're talking about recession, James, are you also talking about, let's say, the labor market condition? Because what I tend to do is, I look at the Bureau of Labor Statistics website, and this just gives you the labor market demand and conditions in US. And surprisingly, the labor market conditions are looking ridiculously good since post-COVID-19, which is a bit strange, to be honest.
Yeah, so there's some oddities there. The number of people that have two jobs is kind of very high, so that has an effect on it. They're also quite volatile numbers on the payrolls. If you look at, it's better to look at the sort of 3-month trend. Actually, it sounds a bit boring, this, but look at the 3-month trend, and it is going down.
Yeah,
and it is falling. So again, we've come out of COVID, and there's been some oddities in the labour market. If you split out by sector, you'll find the manufacturing sector's in a deep recession right now in the US. But the services sector is really propping up the economy. how long can that kind of carry on for? That's my point. And, you can see like the decline in what they call PMIs, purchasing manager indices, which is a good measure of corporate confidence. And that's not looking great at all in the manufacturing sector, and it's holding up for now, at least in the services sector.
That's absolutely great. I definitely need to go out and do more research on that. Now, the next question what I wanted to ask is, and that is the big thing, that is the BlackRock's Bitcoin Spot ETF. And how likely do you think it's going to be approved? And more importantly, what do you think it means for the price of Bitcoin once that thing gets approved?
Well, have you just as much chance of all the other ETF providers out there? People say, oh, okay, they got a track record of 576 out of 577 or something like that. I don't know the exact number. Yeah. That's pretty good. They have gone for this model. They're proposing this model where the crypto exchanges are supervised by someone like the Nasdaq or something like that. I like that approach. They're not the first to employ that approach. My suspicion is that it will be initially postponed.
Delayed.
Decision delayed by the SEC. I do think it will happen, but I think the SEC have got various different requirements that they need to satisfy before they can allow that to happen. And I think also they're cracking down heavily on exchanges at the moment. These exchanges need to be regulated somehow, and I do wonder whether or not the SEC will insist on some sort of proper regulatory supervision before they approve a Bitcoin ETF.
And I do believe they have 240 days, so that pushes back to maybe January of 2024. And next year we have two massive events. One is, the Bitcoin halving and the US election. So at a macro level, how do you think those news will impact the price of Bitcoin in particular? Because look, lately, a lot of the presidential candidates, both from the Democratic side and Republican side, are trying to be advocates of Bitcoin. So towards the second or the third quarter of next year, you think the election news will impact the price of Bitcoin? Or is it too hard to tell right now?
I think it's too hard to tell. I mean, definitely the Republicans seem more crypto-friendly than the Democrats. Yes. So if it becomes evident that the Republicans are likely to win the election next year, then I think that will be Bitcoin will react quite positively to that. I mean, with regards to the halving, I take issue with Plan B's model, the stock to flow.
Yeah.
It's basically talking about scarcity. We have mixed opinions about this at work, but the thing is about Bitcoin supply is it is known. Roughly on April the 27th next year, the reward to miners is going to halve to 450 per day. And we can project out into the future because it's an asymptotic curve. We can project out into the future when the halving events are going to occur. So in essence, the supply is perfectly known.
Yes.
And you could argue theoretically that that's priced in the market. And this is where some of us differ in the company. Some people say, no, it's not priced. I believe it is to some extent already priced. But you could say, well, there's an element of marginal supply that will be lost. And that means it could push up the price. And I have sympathy for that argument, I think. But I don't think stock to flows model stands up to proper statistical scrutiny. And so I wouldn't be using that as a guide to figure out. I mean, I think in the past he said if it didn't reach 100,000 by the end of 2021 or something like that, then his model's broken.
Yeah.
So that didn't happen. But I think what it's got in its favor is that it is a finite asset. And so what happens with monetary policy has a big effect on Bitcoin. I think Bitcoin's price declines and the bubble bursting was because of the Fed and the monetary policy, much more aggressive, hawkish monetary policy. And that popped the Bitcoin bubble. And it's, if you look at gold's very similar. When the Fed's hiking rates aggressively, gold doesn't perform that well. When you get a sign that the Fed is going to back off, gold does perform quite well, and the same with Bitcoin. I think that from a theoretical standpoint, makes sense. So I pay a much more credence to that rather than something like a stock to flow model. There are other sort of valuation metrics that I really like MVRV, market value over realized value. and that's still showing sort of multi-year lows, so quite attractively valued on that point.
That's an excellent point. And James, as the head of research for CoinShares, are you looking at information or data that is not directly connected to the Bitcoin or Ethereum world? So things, let's say, not connected. It could be, let's say, another pandemic, or let's say, geopolitical situation. Do those factors kick in as well?
Yeah, I mean, I think a good example of this is the banking crisis.
Mm-hmm.
For the first time, we had clients, when in March, April time, we had clients who were very worried about the US banking sector and its potential collapse. For the first time, they were saying Bitcoin was, they felt it was a kind of a hedge or a safe haven, even against the banking collapse. And so I do think people see it as a hedge for various different things. So they see it as a political hedge. So it's a non-sovereign store of value. They see it as a hedge against loose monetary policy.
Yeah.
And yeah, to some extent, it's a macroeconomic hedge. And so, yeah, I do think it's becoming that safe haven. And from a theoretical, from a fundamentals perspective, that absolutely makes sense. It is this immutable store of value, really, and perhaps the hardest asset in the world. You'd actually have greater luck, I think, convincing Jerome Powell to change US monetary policy as an individual than you would trying to hack the Bitcoin network and doing a 51% attack.
Absolutely correct. And you mentioned about political factors, and one thing which I should have asked you earlier on, and that is to do with the approval of Bitcoin spot ETF. The former SEC of the former head of, I think he was the former secretary of the Securities Exchange Commission, he actually said that if the Democrats are in charge, most likely the Bitcoin spot ETF will not be approved. And if we do have a Republican president, there is a high possibility for Bitcoin spot ETF to be approved. Do you kind of agree to that sentiment? Because I definitely do.
Yeah, I do. I think it's partly because it can't be approved because it needs to go through the Senate, and the Senate's quite split at the moment, and it's hard to get any decisions made. And US politics are quite bureaucratic anyway. So yeah, much harder to get through. It's kind of a depressing thought that is it there'll be another year until we get, or even longer, to get something like that approved. But there still are conditions where it could be approved now. This kind of supervisory model for various different crypto exchanges might be enough to satisfy the SEC. And also, we've got the McHenry-Thompson bill, which I think might struggle to get through the Senate, but it's a good indication of the political appetite for crypto. It seems way more supportive than the regulatory appetite for crypto.
Yeah. That is a brilliant point, to be honest. That is an absolutely fantastic point. And James, what I wanted to ask next is, what advice would you like to give to someone, let's say high net worthy individuals who are investing in cryptocurrencies? Are there any specific strategies or considerations they should have in mind? Because look, in Dubai, there are quite a lot of high net worthy individuals. And most of them do actually listen to my episode as well. So what advice do you have for them?
Yeah, this is a big subject, and we read a lot about it. So having been a fund manager in the past, what I decided to do was put Bitcoin in a portfolio and see what would happen. And, what I found was, a 4% position in Bitcoin, can really enhance the Sharpe ratios. That's the risk adjusted returns. And that would only add an additional 100 basis points of risk to your portfolio. So not much. But it depends how you add it and how you maintain that position. If you kept on rebalancing that 4% back to the 4% when the price appreciated and back to 4% every quarter when the price depreciated, actually that really helps put a lid on the volatility problem. If you don't like volatility in your portfolio, that is, I think that's a regular rebalancing of your initial position is a very good discipline to help deal with the volatility problem of Bitcoin and the big drawdown problem of Bitcoin as well. It really, if you look at that compared to other alternative asset classes you might have in your portfolio, it's a much, much better diversifier. If you had gold since 2015 in your portfolio, 4% position of gold, it would have only diversified your position from the benchmark by 0.2%, whereas Bitcoin would have done it to the tune of 8%. So much better diversifier. I wrote a paper which actually we're in the process of publishing, probably early next week, called "A Little Bitcoin Goes a Long Way." And this one, I wrote that 3 years ago, and it was about positioning crypto as its own asset class, digital assets. This was 3 years ago. That was a big thing. I like to think I was part of the movement that helped change people's view of crypto. That paper goes through, helping define Bitcoin and crypto assets as their own asset class, but also how it might fit within a portfolio and what various strategies you can take. So that is a big one, regular rebalancing. And also you don't need much in a portfolio to have a very positive impact on the risk-adjusted returns. Let's say the standard benchmark, it had 60% equities, 40% bonds in it. The Sharpe ratio at the moment over the last 7 years would be about 0.5. If you added 2% position, the Sharpe ratio would double to 1. So that's why the title of that paper was "A Little Bitcoin Goes a Long Way," because you don't need much Bitcoin for it to have a very positive impact on the kind of risk-adjusted return characteristics of your portfolio.
That's absolutely excellent. And any idea when that paper would be published? Are we looking at probably September or August?
It's with compliance, and it's written, and it's with the design team. I think early next week.
Early next week, absolutely excellent. And also, James, with the increased popularity, let's say, of DeFi and even NFTs, and Ray Dalio, he does not like Bitcoin, but he's definitely an advocate of NFTs. And even Kevin O'Leary, what he said that, when he's discussing and talking about high net worthy individuals, he's trying to convince them to buy into NFTs. So what are your thoughts on investing into NFTs as well?
I've never been particularly good with art. I have a friend, I go around his house, and he has the most amazing art. He's now got a Banksy. It's very annoying. But he has an eye for these things and can figure out what's really worth investing to. And he just tells me, I just buy what you like. And he just seems to like stuff that really appreciates well, I've never been particularly good at that, to be honest. I do have a few NFTs myself. I have a Damien Hirst NFT, and I particularly like the idea that you could burn the digital and own the physical. I kind of like that. And I got given an Ether Lambo, for instance, which is kind of cool. But I'm not a real expert in that. I wrote something at the start of last year saying that I thought that NFTs were in a big bubble. Annoyingly, I kind of got proven right on that one. I do think there's a market for that kind of thing, but there was a lot of hype around it too. But you know what? It's amazing. People look at CryptoPunks and say, "Who would buy that?" If you don't imagine, it's just but this is it's so fascinating the way it mirrors the real world. People's view on what's valuable in art is hugely subjective. I don't think a Picasso should ever be worth £40 million, but clearly some people do. And I think in the crypto world and the NFT world, exactly the same we're seeing being mirrored there. Don't ask me for any advice on what to buy there. I'm
Totally agree on that. And on Twitter, sometimes they have live spaces as well. And the people actually try to bait other people, not because of the artwork. They just want to kind of flex that they own the NFTs.
Yeah.
It's kind of like the crazy world of NFTs. Now, since last quarter of 2022, James, ChatGPT and artificial intelligence has definitely made quite a lot of buzz. And do you think that it has taken interest away, let's say, from an investment point of view, from Bitcoin? Because I feel that a lot of the investment now is flowing in, let's say, into artificial intelligence related protocols and products. So what are your thoughts about AI stealing some?
We've written about this recently. There's several ways of looking at this. You could say, well, will it take away from Bitcoin mining? Probably not, because if you look at the capex for Bitcoin mining hardware versus the capex for AI hardware is 10 times the cost.
Yeah.
So it's a lot more expensive. And so your capital repayments schedules are a lot longer than they are for something like crypto. So it's kind of less attractive on that front. I had thought that actually a lot of the excess GPUs from mining Ethereum would be now used to crunch AI numbers, and that could be the case. I've heard of quite a few miners wanting to diversify to some extent into data centers and AI just to diversify their revenue base. And it's certainly, if you've got a bunch of sorry about the phone going off in the background. If you've got a bunch of sort of GPUs just sitting around not doing anything, it kind of makes sense to get into that space. But it's a bit challenging, right? You need a whole distribution team around that to kind of sell that AI. It's not like a commodity like Bitcoin. You can just immediately join a pool. So it's complicated from that front. And then how can AI integrate with blockchain? Yeah. I don't think I've seen any really convincing use cases just yet. So I'm kind of sitting on the fence on that one. I think people were very quick and were like getting really excited about, how can Bitcoin and AI all connect together? AI is definitely having a bit of a hype moment at the moment, but even still, if you look at the revenue numbers and the user numbers on ChatGPT, they've fallen pretty sharply recently. So again, it's like any technology, it goes through this hype curve and then it drops off. And I think, we're kind of peak hype with AI at the moment. So I don't think it's really detracting, certainly not what I've heard on an anecdotal level from our clients in terms of Bitcoin investments.
Now you mentioned about ChatGPT, and James, what I did is, after I prepared the questions, I put it into ChatGPT and I asked ChatGPT to come up with one question. So the next question that I'm going to ask is actually from an artificial intelligence, and I'm going to read it out verbatim.
I don't know, by the way. I don't know what this question is.
I just tried to do it earlier today, so let me read it out verbatim. So the question is, considering the rapid evolution of both cryptocurrency landscape and artificial intelligence technology, how do you envision a scenario where artificial intelligence not only enhances investment decision making, but also collaborates with human expertise to navigate the complex investment decision making process, but also collaborates with human expertise to navigate the complex process?
So you would think that this is a very unique question, never asked before in the investment world.
Yeah.
But actually, this is something people have been agonizing over in the traditional investment world for a long time. Mm-hmm. And a really, really good example is ELO scores in chess. So for a long time, a human was always better than a computer at playing chess, and Go for that matter. The AlphaGo program that beat the human it's just a fascinating documentary that was on Netflix. So that was amazing. But what's really interesting in chess is you get an ELO score, and a good chess player will have an ELO score of over 1,200. A computer has an ELO score of, say, 2,000, 2,500, I think, roughly. But a human and a computer can beat a computer on their own. And there's a really interesting competition called Open Chess they have in the US, where people can use as many computers as they like along with themselves to make decisions about chess. And they're some of the most powerful chess players in the world. So I think actually, and this is quite common in the investment world, traditional funds that are kind of these black boxes, programmatic, systematic funds that use computer programs to make investment decisions, they've never really done that well. But those funds that have they call them quant funds. So those quant funds that operate in conjunction with a human, so the qualitative and quant are mixed together, tend to perform the best. So my view is actually the best performance. So this is typical kind of human nature, right? And the world that we live in. And I think we'll see the same with AI. That AI won't on its own, is unlikely to be better ever than a human, but a human and AI together will be incredibly powerful.
That is an absolutely brilliant answer, to be honest. And the fact that you explained it in such a nice way, and that I'm definitely going to think over that once again. Now, so far as artificial intelligence is concerned, I was going to the website of CoinShares, and it does actually state that, you're doing deep research, leveraging artificial intelligence. So can you share some insights that going forward, how will artificial intelligence be used, let's say, by CoinShares in this cryptocurrency space?
I don't know. Our kind of work on this is still emergent. And a lot of it is about creating clean data sets for AI to use. And that's incredibly challenging. To give you an example, we do from time to time publish this, but it's still a bit problematic. We are scraping GitHub data for the number of active developers on various different cryptocurrency ecosystems. And, that's been a 9-month project with, we're using 4 terabytes of data on an AWS server. And we could do it with better programming, but sometimes it takes 2 weeks to update. So but that will leave us some quite a unique data set that no one really has. So Electric Capital has done some interesting work on this actually, but we're taking it that step further. So aggregating that data along with Twitter data, various other social media metrics, that's our approach here to try and come up with something kind of sexy that can make good investment decisions from an AI perspective.
That is absolutely brilliant. And we are towards the end of the episode. And can you share any other upcoming projects or initiatives that CoinShares is currently working on?
Well, I alluded to earlier, we have just launched an actively managed fund. Actually, CoinShares did have an actively managed crypto fund many years ago, and it kind of went in-house. But we've felt now is the time to be launching an actively managed strategy. And so we're launching that, and it's partly because there is client demand for it. We're getting a lot more people saying, okay, well, have you got anything, all your products are passive, except for our blockchain equities fund. Have you got something that's active now that we can invest in? So that's why we're stepping back into that space. And in fact, there aren't that many. We hear a lot of funds out there, but most of them are VC funds, so quite difficult to invest in. So this is obviously a listed fund. So I think, there's definitely a market for that now, and there isn't a huge amount of competition in the space.
That's absolutely great. And James, how can listeners and investors get in touch with you or CoinShares if they do want to find out or get more information? What is the best?
I'm on Twitter. I'm on LinkedIn. I don't mind people getting in touch with me there at all. I try to reply to everyone that responds to me.
Absolutely. And in your post, sometimes I often make a comment, and I think 100% of the time you always responded to each and every of the comments. So thank you so much for that. Now, one final question that I wanted to ask James, and that has nothing to do with Bitcoin or Ethereum and nothing to do with cryptocurrency and blockchain. Now, what is it that you do for work-life balance? Because I really think that work-life balance is absolutely critical.
Yeah. I left London 4 years ago, bought a farm.
Oh, excellent.
With Bitcoin. So trading one real asset for another real asset. I spend a lot of my time, if I'm not on my computer. I quite like restoring cars. I do that on the farm, and also there's lots of land management to deal with too, driving tractors and things like that. So
that is absolutely beautiful. Yeah.
So very, very fortunate.
And do you listen to any type of music when you're driving the tractors, or any genre that you like?
No, I'm getting increasingly frustrated with Apple. Is it AI? I don't know if you can call it AI in terms of finding me new music. So yeah, bizarrely, I'm watching a TV series at the moment. It's called Shantaram, and the Indian music in it is so cool. I'm really getting into that at the moment.
That's absolutely cool to know, because I lived for Manchester for quite a few years, and one of the reasons why I absolutely like that is because of the music scene, especially bands like Black Sabbath. That's been absolute inspiration, particularly for me. And if they do actually release an NFT, I'm definitely going to go crazy with the Black Sabbath NFT, the guitarist NFT. So, brilliant. Anyways, James, thank you so very much for doing this. Really, really appreciate it. Thank you so very much for your time.
Great. All right.